Well, the new Jamie Dimon just dropped, the CEO of JPMorgan Chase, releasing his letter to shareholders that he releases annually. He's talking about the economic outlook. He spoke about the Federal Reserve's policies. Interestingly, he noted, quote, "The stronger the recovery, the higher the rates that follow." And he added, "I believe this could be significantly higher than the markets expect." And that would be above the 10 rate hikes being priced in by the market right now, which is already above the 7 total rate hikes that the Fed is telegraphing. And Akiko, he talked about a lot of other things as well. Geopolitical conflict, noting that the Russia-Ukraine conflict could lead to $1 billion in potential exposure for JP Morgan Chase. What did you note in this letter, which, by the way, is super long? Super long.
It is long, but as we do every year, we talk about this, obviously, because of Jamie Dimon in his position. You mentioned the Fed rate hikes as one risk, Russia-Ukraine war, another one. He points out 3 risks specifically where he says that this is dramatically increase the risk ahead. On Russia, Ukraine, a few things to note here. Number one, he says that he believes that Russia's GDP could be reduced by 12.5%. Europe's exposure to oil and gas from Russia also significant. And he says that could slice the growth prospects here from 4.5% that was expected in GDP growth to 2%. But what I also think is important is the way he talks about how he believes this is going to lead to a realignment globally. And I want to point to one specific thing he said, where he says the war and prior trade disputes with China highlight the critical importance of economic relationships and trade, particularly trade that involves anything affecting national security. And the outcome of these 2 issues will transcend Russia, leading to both a realignment of alliances and a restructuring of global trade. And that last point, Brian, is something I think that is really worth watching here, because obviously we saw a realignment that was already happening as a result of the U.S.-China trade war. This is going to perhaps accelerate that realignment. And, by the way, he's also advocating for the U.S. to rejoin TPP because of some of these realignments that are happening.
I have not heard TPP in a minute. I mean, that's a throwback right there. I mean, look, at the end of the day, it's interesting because
CPTPP now, by the way, Brian. So much has happened since the U.S. last talked about it. A lot of acronyms.
Look, my guy's got to throw a vowel in there or something. I can't remember all of those letters. But look, at the end of the day, I mean, this is important because people who are wondering, well, why do we pay so much attention to what Jamie Dimon is writing? I mean, he is the head of the largest U.S. bank and arguably one of the largest banks in the world as well. One person obviously running this ship since the financial crisis is very much notable when he has thoughts about what's going on. But at the same time, you do kind of wonder, what is the relevancy of all of this in a time that's as geopolitically uncertain as this one, given the fact that things are moving so fast on the Fed front and on geopolitical risk that really all of this could be changing in the next few quarters. I mean, I don't know, maybe Jamie Dimon wants to do a monthly or a quarterly podcast or something. I mean, anything that would spare us reporters from having to read, well, it was a few thousand words. I mean, it takes, I can't read all of this before the 11 a.m. show.
40 pages? But last year was 60 pages, right?
Yeah, right. This one was actually shorter than last year's. Come on.
Yeah, I would advocate for maybe not 40 pages every month, but potentially like a 20-minute digest, a podcast. We'd listen to that, right, Brian?
Yahoo Finance. Yeah, come on, Yahoo Finance, Jamie. Why not?
Yeah.